Alright investors, buckle up. Pinduoduo, the China-based e-commerce powerhouse and Temu owner just released their first quarter 2024 earnings report today. Now, Pinduoduo isn't exactly known for spilling all the tea in their reports, but that is where we come in. We are gonna crack open this financial breakdown and see what gems we can uncover. Will their impressive growth continue? Will the stock price find some stability? Let's dive in and find out. Pinduoduo is a very mysterious company. On their earnings report or annual presentation, they don't usually reveal much of their business. They say it's some secrets, they doesn't want to share their business model to competitors, but it could be a red flag on this company. But if what they reveal is true, they are managing this company pretty well and their business model is incredible. And I do believe in this company. It is a company I've invested about 1 year ago and it's already been almost a three bagger for me, so I'm really happy. And this earnings report was pretty good. Let's look into the highlights. When we look into the revenues, they say it was an increase of 131% when compared the same quarter of 2023. For this year, I'm expecting this company to grow around 50%, but they are growing above expectation. They are always beating on revenue and earnings every quarter. So I don't know, or these results are a lie, or they are doing pretty well. So it's hard to believe how well this company is performing. Their operating profit increased 275 when compared to the last quarter. Net income an increase of 246%. I'm expecting this company to grow around 50% this year, 20% next year, and from then growing at a lower pace, but they are always beating expectations. So even though this was a bit on revenue, when you compare to analyst expectations, they were about 15% higher than what analysts were expecting. Their earnings were lower than what was expected, and usually the first quarter of this of Pinduoduo is always low profit quarter. It's one of their worst quarters. So even as it is, they showed an incredible growth compared year on year. So growing still above 100%, doubling every year, it's pretty awesome. Especially Pinduoduo is not a small company anymore. They are worth more than 200 billions and they are selling all over the world incredible products. So I'm really happy as a shareholder, and I do not believe how well this company is doing. So, words from the chairman: we are committed to offering a trustworthy shopping environment for our users around the world. We will keep focusing on growing our long-term intrinsic value through investing in initiatives that bring sustainable impact to our communities. Good words. As an investor, I would like to see that happening in the company. This year is critical for us to deepen the execution of our high quality development strategy. I agree. What they have been doing, their management has been really high quality. They are basically a marketplace, but they make money selling advertising on their business. So they are high margin business, especially when you compare to their competitors. For example, we will focus on our efforts on improving the overall consumer experience, strengthening our supply chains capability, and fostering a healthy platform ecosystem. They are still investing in their business. They are having high returns on investment, and they are beating competition. They are performing better than Alibaba, JD, for example, and they are gaining market share abroad as well. So their Temu platform has been a huge success. In the first quarter, we continued our investment in key areas critical to our high-quality development strategy. Rather than focusing on short-term results, we prioritize long-term value creation and remain committed to further deepening our investments in the future. Good words. I do believe that this is what they have been doing in the past years, so this is a winning formula. If they continue to grow at this pace, investing and have these high returns, I do believe this company will continue to be a huge and a great investment. So after this report, it was really good. So when I look to the stock price today, they started really well. They were up 6% or 5%, but now they are only up 1%. But the market is down. Chinese stocks are down on, I don't know wherever, but they are always trading up and down. So I don't know what is happening today for the Alibaba, JD, Tencent to be down. But Pinduoduo is performing better. But with this great result, I would expect this company to be really better. But let's now talk about the fundamentals. I've been talking about this company a lot in previous videos. I've not been doing a lot of videos recently about Pinduoduo because the stock price has been up a lot. So I started buying this company 1 year ago and they were trading at $60. Now they are trading $150. It's almost a three bagger for me. I was interested in buying a lot of this company, but since the price has gone up, I'm not been a lot of interested anymore. It's already a big position in my portfolio. Full disclosure, I do own this company, but do always do your due diligence and don't buy this company because I do own it. So as looking at fundamentals, all check marks, revenue growth 80% year on year, so huge margins. I do really like their business model, especially when it's like in e-commerce. So they are a platform. They sell advertising on that. They do not earn money by selling products. They just only do the platform thing and earn fees on that. They have a pretty good balance sheet, more than $3 billion in cash in hand, and their long-term debt is under $1 billion. They are trading at a forward P of only 12. It's higher for a Chinese company, but when you look at their fundamentals, it is incredible cheap. High returns on invested capital and on equity, above 30%. Last 2 years, above 2%. They have a lot of competitive advantage since they do not sell the products, or they don't own any stock. They are just the owner of the platform. Their group on China, they have a pretty successful company when Chinese citizens buy items in group, having huge discounts. That was a business model that was a huge success in China. Now with the Temu platform, they are selling a lot of items to Europe, United States at an incredible discount, and they have been a huge success in there. They have been free cash flow positive. I'm expecting them to return in the near future capital to the shareholders. I'm expecting them to be doing a lot of shares buyback as other Chinese companies have been doing. They are expecting to grow 50% this year, 30% next year. This is analyst expectation. For the rest of years, I will talk about my base case. I'm expecting them to grow around 15% and 10% for the last 5 years. A P of 20, which is low. These margins of 25% are incredibly low. I do really believe they can have free cash flow margins above 30%. So I'm being a lot conservative. I'm using a discount rate of 50% for my base case, because it is a higher discount rate, because I need a lot of margin of safety, because they have counter risk, because they are a Chinese company and they are growing a lot. There are a lot of risks in this company, because I do not believe they are saying a lot of their investment business, so there are a lot of secrets around that. So there are that risk as well, competition from Alibaba, JD always. So to be investing in this company, I want a higher margin of safety. So a discount rate of 15%, it's the minimum I want. And even all that conservative analysis and the huge discount rate, I came with an intrinsic value of around $160. They're trading right now at 146, so they are still under my intrinsic value. High quality score, huge and great fundamentals, still growing at a faster rate than most of their competition. So it is incredible. So as long as they continue to grow, this investment will be a huge hit, and they already have been one of my best stock performing in the last year. So I'm really happy, and as a Pinduoduo shareholder, and I'm not thinking selling any of it. I thought in buying more when they hit $110. That was a great price, but the reason I didn't increase my position, it was because it is already a huge position in my portfolio, around 10%. So I'm really happy with my position in Pinduoduo, and I hope I can still hold this comp for a long time. So huge and incredible earnings report from Pinduoduo. It's hard to believe how great they are performing. So it might be a red flag, we don't know, but I'm still investing. So I love this earnings report, and Pinduoduo is performing really well. And all Chinese companies have had great earnings report, and the stock was down, and after 1 week they recover and they are going up. So it might happen again with Pinduoduo, even though they are only up less than 1% today. We might see a rally in the next few days, like it happened with other Chinese stock during this quarter. Let's see. We don't know the future, so we are here to see. So I hope you liked this video, guys. I hope you liked my Pinduoduo analysis of this latest earnings report, and if you like it, please like and subscribe. See you next time.